Our market experts are going to break down what could unfold once trading officially gets underway in less than 30 minutes. And that is where we begin today's show. Joining me now is Tom Hayes. He's the chairman and managing member at Great Hill Capital. Tom, welcome to the New York Stock Exchange.
Thanks for having me, Ashley.
All right, so we heard Friday's news that the Supreme Court struck down Trump's tariffs. How did that impact markets?
I think it's a non-issue. It does bring a level of uncertainty. He's going to do 15% for the next 5 months. That takes us to July. And, you know, the interesting thing about 15%, that's the number they already have with Europe. That's the number they already have with South Korea. That's the number they already have with Japan. Now, the issue is they have to do these investigations to access the other code of the 1974 Tariff Act. Those investigations usually take a year. So at the end of 5 months, you might be at a cliff where tariff revenue actually declines if he doesn't get congressional approval for an extension. So I think that's where the uncertainty comes in, but I think that's also a positive going into the election. I don't know that they're going to be in a big rush to get more tariffs on right before the election. That'll be a January issue.
All right, and what else are you tracking as we approach today's session?
Well, I think a couple of things. First off, earnings have been good, okay? Up 13.2% earnings growth with 75% reporting, so that's positive. Estimates have stayed up, $312 for this year on the S&P, $361 for next year. Economic data was a little mixed on Friday. You saw the manufacturing PMI 1 point less than expected. You saw inflation 0.1% higher than expected. And you saw job creation last year was the lowest outside of a recession since 2003 with 181,000. You take that with a little grain of salt because when your unemployment rate is at 4.3%, it's hard to create a lot of jobs because everyone's already employed. So I think it sets the stage for constructive follow through for the next couple of months. You look at software is dramatically oversold. I would be careful on this one. I think we're going to get a violent counter trend bounce that is going to be sold over the coming months. So if you see this huge rally, people are going to say, oh, software's out of the water, it was overblown. I think it's going to show continued weakness into the end of the year because it's very hard to assess the terminal value on that. And then finally, Mag 7, the CapEx as a percentage of operating cash flow is getting too high, okay? It's now 60%, which is equivalent to big oil, and it's expected to go now with Amazon taking up their numbers by 200 billion. It's expected to go to 92% of operating cash flow, which will make free cash flow negative. And how do you value that? So are we going to start to see some of these Mag 7 or hyperscalers start to walk back some of their CapEx? We might find out on Wednesday when we hear from NVIDIA and see what those commitments are. And then on Thursday when we hear from Salesforce, what is the software story, and Intuit, what is the software story, because those stocks have been hit hard.
And that leads to my next question. Of course, we're at the back half of earnings season. NVIDIA will report Wednesday after the bell. What are you going to be listening for?
I think CapEx commitments, I think it's less what they say and more the market's reaction to it. I think we have something called like a bit of a debasement trade happening this quarter, meaning even if companies report well, they're getting sold off after their reports. Companies that have been beating on top line, bottom line, and increasing guidance, a lot of those have sold off as well. So I think it's less what Jensen Huang says, because Jensen's always going to say everything's great, and if it's not great, he's going to say we're going to make so much money on robots, it's going to be incredible anyway. Let's see what the market does afterwards, and that's going to tell us what we can expect for the next couple of months in terms of does Mag 7 get a bid? Do the hyperscalers get a bid? And to a lesser extent, do the AI-affected software companies get a bid? Because those have been the three weights. While defensives have done unbelievably well starting the year, staples have had their best start to the year in history. Healthcare is doing well. A lot of the defensives, even materials and energy, are doing well to start the year. I think that's going to persist, that rotation. 493 doing better than the Mag 7. Small cap doing better than large cap, international doing better than domestic with the weaker dollar.
And you also touched on those inflation numbers that came out. We got PCE data, GDP data on Friday. What is your take on all of that?
I think it was mixed. I think Bessent came out and tried to reassure the market that he's expecting 3 to 4% GDP. I wouldn't put it past him. You've got increased tax refunds coming. You've got deregulation coming. You have a little bit of tariff relief, believe it or not, in the short term. So I think those all bode well for Main Street. I think the market will hold up for the next couple of months. But in a midterm election year, going back 70 years, you tend to get an intra-year drawdown and a lot of volatility and uncertainty into the election. So I think we stay strong into April or so, maybe May, and then expect some volatility, which is why you want to have exposure to defensives like healthcare, staples, and the like.
Speaking of, you were mentioning these other sectors. Any other sectors besides those that are interesting to you right now?
Well, I think energy has been very interesting. Everyone was bearish on energy coming into the year, but if you're going to power all these data centers and all the demand, you want to have exposure there. We've got National Oil, Welvarco in our portfolio. Natural gas, we've got Comstock Resources. So we definitely like energy. Materials has started to perform. But for us, we want to stick with staples like Estee Lauder and healthcare like Dentsply Sirona, the leading supplier of dental supplies and technologies. They've been around since 1899. That's a turnaround story.
All right, anything under the radar that you think might become a big headline in the coming weeks or months?
I think the big worry is Mag 7 capex or free cash flow turning negative. You know, buybacks are at a 5-year low, the lowest since 2020. So earnings growth is decelerating for the Mag 7, capex is increasing, buybacks are declining. So we really have to keep our eye on the hyperscalers. And the big headline would be, who blinks first? You remember when Mark Zuckerberg was investing in the metaverse and the stock went down a lot, and then all of a sudden he said, we're going to stop investing, and the stock rebounded. The question is, who's going to blink first and say, we're going to ease up on our capex, and then what impact will that have on the market? Does the Mag 7 start to rally if and when that happens, and who's going to be the first one to blink?
All right, Tom Hayes, Chairman and Managing Member at Great Hill Capital. Thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley.